My name is Michael Gayed, publisher of the Lead Lag Report. Joining me for the hour, Dan Ushman, who is the founder, creator, the man behind TrendSpider, which we'll talk about. Dan, for those who are not familiar with your background, talk about some of the entrepreneurial ventures that you've been involved in, and how did you get involved in making trading software to begin with?
Yeah, sure. Thanks for having me on, Michael. It's good to be here again. So where to start? I've only had one real job in my life, right? So that was in high school, and everything else I've done for the last 25 years has been entrepreneurial. TrendSpider is my fifth step. It came out of, a passion for trading, right? When I sold my first business, I got into trading, and then as I built my last company, which automated deploying physical servers, right? On-demand bare metal cloud, I started to wonder, why is trading so manual? Like, why can we automate deploying a physical server with custom hardware, with custom network and operating system and software and all that kind of stuff with just a push of a button? But, we have to sit there and analyze charts and find opportunities and manually trade. So as time progressed, I got to know some people in the hedge fund world, right? I got to understand how they don't trade the same way retail people trade, right? They're not sitting there placing orders, discretionary in the moment as things are happening and trying to catch moves. They're automating things. They're using technology, they're scanning, they're automating execution, and then they're going in and refining their algorithms, right? Refining their code over time to improve it, but they're not making in the moment decisions, at least not most of them. Not feverishly trying to pick a options contract, as something's breaking out. They're not doing any of that junk. So TrendSpider came from that realization that, there are a lot of reasons why retail traders are disadvantaged, but being undertooled, having limited access to information, limited access to data, right, and having to make every decision on the fly in the moment is a big, big, big part of it. So we tried to build something that would automate as much of the process as we can, right? And we've taken it from so just in the beginning, we started with just chart analysis, like automating trend lines and finding patterns. We've taken it through scanning, through strategy development, through alerting, and very, very soon we're going to be rolling out the ability to just push a few buttons and turn a strategy from a backtester into a live trading bot without having to write any code. And that's the idea, right? To bring enterprise level tools to the retail world, right? To empower retail to kind of level the playing field with technology. Because that's what's kind of unleveled it, right? That's what's put retail traders in a disadvantage, is their lack of access to it. So, that's what we're trying to change.
Okay, so I think there's an impression among retail, when you think about this retail versus institutional construct, that it's more than just automation, but you kind of alluded to it. It's also about data. And
Yes.
the idea that there's this kind of hidden data which only institutions see but nobody else sees. How much do you think that explains sort of the differential between retail versus institutional? Because from my own experience, oftentimes the reason retail, I would argue, underperforms, let's call it the quote unquote bigger players, isn't necessarily because of data, but because of discipline, which kind of goes to the coding part. But talk through that dynamic, because more data doesn't necessarily mean better data.
No, absolutely not. And more data doesn't necessarily mean easier decisions, right? Sometimes you get paralyzed by having too much data. But at its core, right? You take a step back and look at, if you think of it as what tools do you have or what weapons do you have when you're going to war? Retail traders are usually going with a pocket knife, right? And institutions or professional investors, right? People who do this full time, right, for an organization that focuses on this, are going in with tanks and fighter jets, right? So it's not surprising. But, technology can help with bringing data in, but it can also help with making data consumable, right? Making it easy to understand it and put it to use, because that is part of the challenge, right? If you provide, a pile of data, right, you have to then sift through it and understand it and figure out a strategy with it. So we bring data in that is esoteric, that is unique, right? Sometimes not the most unique data, but the way it is presented is unique. We make it visual. Most retail traders have learned to use charts heavily in their analysis, right? Technical has become a very important part of it. And, we can argue about the merit of technical analysis or the problems with it all day, but, that is how most retail traders who are actively trading perform their analysis. So if you bring in data that is not price data, but you make it consumable in a similar way. One example I like to use is analyst estimates, right? The wirehouses, the JP Morgans, the Goldmans, they all have analysts that follow and cover stocks. They provide estimates, right? Those estimates are then compared to earnings, and a surprise one way or the other can move the stock in a big way. How do you know as a retail trader which analysts to pay attention to? Which ones are horrible at their job? Which ones are great at their job? It's really hard. You need like an account of tip ranks or something. You need to be able to like look at the analysts, you be able to compare their calls on the current symbol that you're considering trading versus what it actually did. Nobody besides TrendSpider, as far as I know, makes it very easy to consume that, right? We just plot it on your chart like volume bars at the bottom. So we make something that is a piece of data that you would otherwise have to pay for. We include it in the platform and we make it easy to understand it. Through that, I know that like if you are trading Tesla, for example, is my favorite example, never do what Citibank tells you to do. Never do what JP Morgan tells you to do because they're always wrong. Do the opposite. If you plot Citibank's recommendations, like their buy, sell, hold recommendations on a Tesla chart, they almost bottom ticket every time with their sell recommendation. They top ticket with their buys, right? And it's hilarious. But that is just a very simple thing that if a retail trader can look at and understand quickly, they might not get sucked in to that, pop when Citibank says buy Tesla, it pops for a day and then it crashes for a month. Right? They might not get pulled into that. They might actually be able to take the opposite end of that and actually take advantage of that. So we try to bring data in, but then we try to make it easy to understand it, right? Make it available in a way that is visual and quick to just consume. Does that answer the question?
Yeah, no, and I want to go down that a little bit further at some point because I think it's analysts. The idea of a kind of consistent star analyst. I've seen some data that suggests there's some power to that. I've seen other data that suggests there's more kind of randomness, but we'll touch on that because I think it's an interesting direction.
Yeah, of course. It's a great question. So TrendSpider kind of was born out of a personal desire to have a tool that I could use, right? I built it initially for very selfish reasons to keep it close to myself and people I knew and to have, a platform that would make us more effective at trading. I used to
And by the way, on that point, Dan, I mean, I've heard that a lot of entrepreneurs, first and foremost, are trying to solve their own problem.
Yes, it's a really common thing. Almost every business I've been involved in has been like catalyzed by a problem I felt myself. I think the best businesses, the best entrepreneurs take something that they feel themselves, a personal pain, and try to solve that. The idea that we went into a market that had a number of established players. I mean, it's true. There is Interactive Brokers, TWS. There's Thinkorswim. A lot of these platforms are free, provided by brokers, but they're also broker platforms. And broker platforms are notoriously loathed by their users. My market research suggested like 80% of active traders use third-party tools for the vast majority of their analysis and research, and they use their broker purely, almost entirely, for execution. Right, so there's no loyalty between users and their brokers. Generally, they don't care. Right, it's just a place to execute orders, and this has compounded over time as the broker industry raced to the bottom with zero commissions. They start to lose what little differentiation they had before that. Now they're all the same. They all charge nothing for commissions. They all sell your order form or order flow to the same 5 people. TrendSpider, it came out of this night when I was sitting around trading one day, and I was like, "Why am I doing this by hand? This sucks. Like, it's time consuming. I've been staring at this chart for an hour. I realized I just made a big mistake because I didn't reset my zoom when I reanalyzed it from the last chart, and now I've analyzed a different set of data. And this idea that how can I know if my trading strategy is an effective strategy or not if I don't do it exactly the same way every time? There's no precision in manual analysis. Most people are very bad at that. Then came this realization that in order to have an effective trading system that used a lot of different data, I would need to subscribe and use a number of different tools. Research supports that, right? An average active trader pays for 4 to 6 different trading tools. They pay for a charting tool, they pay for a scanner, they often pay for an options flow tool. They're paying for a lot of different things. These tools all are disparate, they're separate products. They each carry their own cost. They each have their own interface. And importantly, but poorly understood, they each use a different source for their data usually. And if you understand how market data works, it is not the same across the board. The price quote you get in E-Trade at 1:03 p.m. on a Tuesday for Apple is going to be slightly different than the same symbol at the same time on TD or IBKR or Robinhood. It's because the data is not exactly the same. Some of them may pull their data from NASDAQ, some may pull from NYSE, some may pull from BATS. Some may incorporate trades between their users, right? Like two TD customers trading between each other internally entirely, and only reporting that trade during the official kind of close calculation after the market has closed. So it's tricky as a retail trader to get access to everything you would need to be truly competitive from one place is often very hard. And then what happens to broker platforms during periods of heightened volatility? When during the COVID crash, during some of the very volatile periods in the last few months, Interactive Brokers freezes. Like, it is impossible to load an options chain. Your charts don't update, right? The entire platform is under an extreme amount of stress. And these are platforms that you're trying to use to execute, if you're trying to analyze on them, right? It really slows you down. We have a lot of users who get pushed into third-party tools because they had to suffer through some losses because their broker platforms froze up. So it's a complex question. It's very difficult to build trading software. That's why even today, like 4 years in, I consider the product basically an advanced MVP. There's still quite a bit more that needs to be added to it. But there's a lot of reasons why users prefer using a third-party tool to a broker tool. TrendSpider is unique in the sense it brings a lot of third-party tools into one place. It ties them all together and lets them all work together. So it's one platform that has options flow and backtesting and scanning all in one place instead of you having to buy multiple tools. But then it's also built for high availability. I come from the cloud infrastructure world where uptime and availability is like the most important thing. And we tried to engineer that into the platform. So, as those events happen, we see spikes in user growth, right? When TD completely crashed, it was like, I think it was January. It was one of these really wild months we had recently. But TD's Thinkorswim was down. Like, I have TD. I had it on a computer. I couldn't load a chart. When a chart did load, the prices didn't, match up. Like, the order book and the chart were disconnected. The thing was really struggling. You don't have that issue in a lot of third-party systems because they're built for that level of availability. And it makes sense if you think about when a lot of these broker tools were built. They were built a decade ago. Like Thinkorswim, I remember when they were at 600 West Chicago, I almost opened a data center in that building. I remember their office. I mean, it was a really cool office. But that was when that product was really built. This was 10, 15 years ago. They were not designed for the modern markets, which include a significantly larger amount of volume and a lot more automation, which causes a lot more order flow, right? Even the funds out there that are trading automatically, right, using algorithms, those add volume, right? There's a lot more transactions happening because there's less people involved along the way. And yet we know from data that even during the most retail active periods, they only make up a small amount of the overall volume. Like during the GME craze, we're going to be releasing this data into TrendSpider soon. But according to like NASDAQ's retail/institutional segmentation, retail made up 6-7% of that GME craze. So it's interesting when you're building trading software for retail, because you have to like account for the unique ways that they participate in the market and their unique need to buy a lot of different tools. You cannot get options flow in a broker platform. Sometimes they have analyst data, but it's not like displayed on a chart. They're not built by traders. They're not built for traders. They're built by brokers, and they're primarily built with brokers' mindset.
And maybe an additional point to that: how do you determine what features are actually going to be not only used today but used later, right? Because there are always these fads that come in, right? And when you're coding, right, you always have to think longer term on that.
They are. So a lot of it is there's two pathways that features and tools kind of bubble up from. The first, and we like to call it being very opinionated. This is stuff that we just want to do, that we think is cool, right? We don't know if it's going to stick or not, but it's fun, it's interesting, it's experimental, right? And we just want to build cool stuff. If you ask my CTO what gets him up in the morning, it's not building trading software, it's building cool stuff. So like raindrop charts, that is an opinionated feature. We came up with it. We thought that it might be cool. People might want to use it. We didn't know. You just throw it out there and see what happens. And raindrops are the second most popular type of chart in TrendSpider after candles. Like they've really, really hockey sticked up. And they're unique. They take data that is difficult to consume and they make it a little easier to consume. It's like integrating a volume profile with a candle. right? But it makes it easy to spot when a move has real volume behind it or if it's just kind of a fake out. Like you will see these wicks on raindrop charts that are different than wicks on a traditional candle chart because raindrops do not take into account open and close prices at all. And this is the opinionated part. We were sitting around talking and we're like, gosh, we really think open and close prices are arbitrary numbers, right? They don't mean much. All they tell you is where price was trading at a particular moment in time. When that time changed is when that open or close is formed and locked in. What does that tell you about the market? Very little. It's I think people put a lot more weight on open and close prices than they should. When you take a raindrop, instead of an open or close price, you're taking a volume weighted average price, right? And you're dividing the period into halves. So on a traditional, US market, trading day is 6.5 hours. So each half is 3.25 hours long. And you're plotting the left, which looks like the open price, but the left price as the volume weighted price of the first half of the period and the right as the volume weighted price of the second half. It's a very simple concept. We've open sourced the idea for it, right? There's a white paper that explains how it works. I also don't believe in black boxes. I think if we're asking people to use a tool and make it part of their decision making, they should know exactly how it's calculated, exactly how it works. So we've open sourced all the logic behind raindrops, but you see very different information. You may see on a candle chart something that looks like a breakout, right? You may have a level, you may have price that has opened, pushed through it, and closed above it. You may look at that same chart on a raindrop chart and see that there's zero volume during that push. It was a very, very low volume move. Most of the volume stayed below that line, your level that you're watching. And you can watch what happens the next day. And it's very often exactly what the raindrop would suggest. One of the things that I really like looking for is the divergence between a raindrop and a candle. I think I only answered half of your question, though. What was the other half? Yeah, so I'll take those in order. Prioritizing features is always a battle. There's a weekly priority meeting for dev. We plan 2 weeks forward. So this week's meeting is for what we'll do in 2 weeks. And a lot of times it comes down to opinions, right? And a lot of times it comes down to just a guess. We will take feedback from users. We try to listen to user feedback, but we try to do it with a little bit of a grain of salt. I always come back to this Henry Ford quote. It's something like, if I asked people what they wanted, they would have said a faster horse. And, a lot of that is true when it comes to markets and other types of software tools. Users have some imagination, but not a lot of it. A lot of the feature requests we get are things like that we put into a category we call table stakes. Because we had to make a lot of very tough decisions early on when building this product. It's a limited team with a small number of people on it. You cannot build every feature that Thinkorswim has if you want to also build unique and innovative things. You have to balance the two. So we try to alternate our sprints, right? We try to take one sprint, which is 2 weeks long, and build something that we want to build that we think is cool, that might be a hit, that is an opinion that we have for whatever reason. And then we like to take 2 weeks after that and focus on table stakes features, right? This is adding drawing tools. This is adding standard indicators, right? This is adding the basic stuff that every platform has. This is the problem with building trading software. It's why it takes 4 years to get past an MVP phase, right, with a small team. It's because the table stakes features will hurt your business, but the unique features are what will attract and help your business. Adding a drawing tool will not add any new customers. Everybody can draw on a chart. But adding a drawing tool will keep customers who will leave because they can't draw on it. So it's tricky to balance the two. And it often comes down to opinions. I mean, we'll sometimes just flip a coin. Like, there's 5 things that we really want to do. We like them all. Let's play rock, paper, scissors. Let's use a random number generator and, guess. Let's just find a way to move forward and push through it. And recognizing that not everything's going to be a hit. We will release lots of stuff that is very powerful and very cool that users just don't fall in love with or don't find or don't use. One thing that is kind of falls into that bucket for me is automated anchoring. I love automated anchoring. I think it's one of the most powerful things in the tool because when you pull up a chart, you can automatically anchor your volume profile, your anchored VWAPs to specific points on every chart automatically. You don't have to do it by hand. It saves you a lot of clicking. Yet it's one of the least used parts of the product. Very few people actually use it. Most people seem to just prefer to anchor manually. That blew my mind. I thought that once we roll out auto anchoring, everybody will want to do that. Because it's so much easier. It's less clicking, and yet for whatever reason, that's not the case. What was the third question that you snuck in? Yeah, absolutely. This is so marketplaces. It's funny, actually. People use Apple Store, the Apple App Store, as a marketplace example, but few know that when Steve Jobs initially pitched it to his investors at the very beginning of the marketplace, he did not intend to make it a marketplace. He intended to make it a very curated store where Apple would provide most of the apps in it, or their certified developers would, and then it got opened up slowly as they realized that they can't keep up with this. But initially, they had this attitude that like we don't want this full of junky apps. We want this full of very high quality programs, and the only way to do that is to really curate who can deploy to the App Store. We are doing that, right? I think the way that indicators, custom strategies, custom scanner configs are traded is archaic. Every platform has a scripting language in it, right? So PineScript is a scripting language that TradingView has. ThinkScript is Thinkorswim. So there's EasyLang. There's a whole bunch of them. These platforms use custom languages for a very nefarious reason in my mind. Is to lock people in. It's to keep them stuck with Thinkorswim. Once you've built your code in ThinkScript, it's not easy to then take that code and convert it to PineScript or EasyLang or MT4 or whatever, or MQL. It's more work. So it creates a lock-in issue. It's their effort to keep their users locked in. We're very close to rolling out our own scripting. So TrendSpider will support extensibility. You'll be able to build on top of it probably within the next 2 months. It's basically done. The only thing missing from it is the interface for like saving custom scripts and sharing them and things like that. But the actual interpretation is done. But we did it using JavaScript, right? Which is a language that 400 million programmers around the world already know how to code in. And not only do we use JavaScript, but we used unadulterated JavaScript. So you can incorporate outside data, right? You can incorporate outside libraries, such as Google Machine Learning Library. There's a JavaScript library for that. There's actually numerous machine learning libraries for JavaScript made by different people. And this will empower retail traders to, A, be able to build on top of TrendSpider, but B, be able to find people to build for them, because most traders are not programmers. It's very tough to find a programmer who can write in PineScript or ThinkScript. There's just not that many of them, because these languages only work in one platform and they're just made up, right, by a company. And the reason they were made up is to lock you in, not to build a good language. So we built something based on a standard open source language. And we made it better by not restricting it, by just making it as a straight up language. And when that is out there, we're going to follow up with a way for people to list things they built on it, to share them, to trade them, and to sell them if they choose to. We're still working on the design of the marketplace part of it, what it will look like, but it's being modeled very closely after like the Google Chrome store. So it's, we want to have reviews. We want it to be easy to share stuff. We want it to be a separate kind of website store where anybody can browse it. And we want to make it very open so anybody can submit to it. Very much like the Android store is now, where anybody can build something and submit it to them. The other thing about it is the way these ideas are shared. I mentioned archaic. Maybe that's even an understatement. You have to find somebody's who's selling an indicator or a strategy. You have to contact them and buy it directly from them. And then they need to share the code or a share link with protected code with you for you to access it in whatever platform you use. And that's how it works today. That's how almost all people who use a custom indicator got it. Right? They went to a developer's website, they bought it straight from the developer, and then they were given a way to get it into their platform. And the developer has to manage this manually. They need to basically keep a spreadsheet of everyone who's bought their indicators or their ideas. And if somebody stops paying them, they have to manually revoke their access. I don't know why it's this messy, but that's the way it is. We do plan to fix that by making it just a nice marketplace where it's just all automatic. And some of the things Apple's done have really inspired us. Somebody's like the idea of enforcing certain policies on people. We will enforce a minimum free trial on anything built on TrendSpider that's being sold, so that may the best ideas win. Right? Like, let's not lock people in. Let's not force people to pay for something before they can use it. Let's make it open and accessible and let the best ideas win. We also have this concept, and I don't know if we're going to do this, but I'll tell you about it, right? Of taking a portion of people's subscription fees for TrendSpider and earmarking that to pay developers, and then making it free and treating it like Spotify. The Spotify model basically says like, anything that you build on TrendSpider, anybody can use. Based on how many people are using it, TrendSpider will pay you for it, right? Just like you pay Spotify a monthly fee to access their library, but then they pay their artists per play, right? Per time their song is played or listened to. The similar kind of approach could be used in trading, where let the best ideas really win. Make it completely open. So anybody can try anything, and stuff that works will naturally kind of bubble up to the top. We'll get more reviews and more people will use them. I don't know if we're going to get there like to the Spotify model right away, but that's where I really kind of the vision is like, if we can get there, then I think we'll really help a lot of people. We'll help retail traders get access to all kinds of ideas that otherwise they would never be able to try because they'd have to pay for them. And we give developers a way to distribute things in a frictionless way. If people use it, you get paid for it, right? If people listen to your song, you get paid for it. Same kind of idea.
You touched on the dev side, Dan, and I have a little bit of experience with this because some may be aware I've got this app that is now in kind of its fifth iteration, High Edition. I reached out to different developers here in the US to have a dev team located in India, but I have to imagine that dev is quite a challenge in finding the right talent there when it comes to trading software or analysis software, because not only do you hope that they know how to code the stuff, but that they actually understand what it is they're coding, as opposed to just trying to translate what you want to see into some visual software, right? So talk about that dynamic a bit, as far as from an entrepreneurial standpoint. How do you find the right talent to not just do what you say you want to see, in your software, but who might actually push back and say, well, no, I understand markets, that doesn't actually make sense.
Yeah, that's an amazingly good question. That's hard. That's really, really hard. I got very lucky early on in TrendSpider. I bumped into Russ, who's our CTO. So I'll tell you the story. I was looking for a developer to build a trading tool for myself, right? I wanted to automate the steps that I take when I analyze a stock. And I got introduced to a developer, and he seemed like the right guy for it. And at the very last minute, he was like, I'm sorry, something came up, and I can't do it. You should talk to my friend Russ. And Russ turned out to be a guy with, an entire career building trading tech. He worked at eSignal. He was an early employee at TradingView. He worked at Trading Sim. He's built a number of custom strategies. So it was a very lucky find. A slight detour onto the topic of luck. I don't think enough entrepreneurs are honest about the role that luck plays in their careers and their success and the things they pull off. Like I got into the web hosting industry very early on in high school. I got interested because I happened to go to the library and sit down next to a friend of mine while he just happened to be looking at a web hosting forum, like a message board. That was how I got into an industry that turned into a 15-year career, and 3 startups actually in that space. Pure luck. Had I not walked into that library, had I not sat down next to that one particular friend of mine, right? Like that could have been a very different set of events, right? Like life could be completely different today. I'm a big believer in luck and the butterfly effect, right? And finding developers is 50% knowing where to look, right? And 50% luck. Right. And the thing about luck is, it's like gambling, right? There's odds to it. Like it takes, you try something enough times, like eventually you'll probably get lucky at it. So part of creating luck and being lucky is having some standards, right? I probably talked to like 50 different devs before I found Dennis, who ultimately introduced me to Russ, right? I turned a lot of people down. Then, so that's building like the core team, right? Like now I have the CTO, who understands trading, he understands markets, he understands trading tech. Now, how do I build a team around that? Right. Well, it's very difficult if every developer that you hire has to be a trader, because most of them are not. Although crypto has really changed that. A lot of them are into crypto nowadays. But, it wasn't always the case. So then you have to create some kind of way to get them excited about it. When we hire a dev now, we give them a funded crypto account. Right. We'll give them an account at, Binance or Bybit or, FTX, and we'll fund it and we'll spend time getting them excited about trading. We'll pair them up with somebody on a team who trades. And we have an internal trade room where we try to encourage everybody to trade, and we'll fund it. Like a lot of people are not comfortable putting money down into trading themselves when they don't know anything about it. So we'll give them $500 in a trading account and we'll help them kind of explore it and get interested in it. And then the other trick to it, and this is something that Russ is really, really good at, is fire them fast when it's apparent it's not working out. This adage of hire slow, fire fast is really good advice, right? Few entrepreneurs understand it. But if you get that gut sense that somebody's not the right fit, they usually aren't the right fit. And if you can listen to yourself, this is part of being opinionated and being honest with yourself, right? If you know that, act on it, get rid of them, bring somebody else in, because you cannot build a good product if you don't have the right devs behind it. Finally, breaking things out into small bite-sized bits, right? So we have front end devs, we have back end devs, we have database engineers, right? We have different developers that do different little pieces of it. They don't have to be experts in markets if the person who's orchestrating their effort is, because their tasks are being broken down into smaller bits and pieces. Right. It's not like in raindrops, right? The task, for the backend guy was find a way to isolate the volume profiles, within a few microseconds on, a chart with 1,000 candles on it. Because to calculate a raindrop, you have to, like, if you're calculating a raindrop for a 10-minute time frame, you need to actually download the 1-minute candles. I keep talking about raindrops because it's just one of those things that I'm very proud of. Right. But the process of building it, the idea came from Russ. Right. I remember he called me one day. He's like, dude, I have this idea. It might sound a little crazy. Just hear me out. And before I tell you about it, I really want to build it. He's like, I thought of this in the shower. And I'm like, okay, that's interesting. I don't know if that's worth doing. And he was very opinionated. He's like, I think it's cool. I think it'll be very popular. I want to build it. So then I'm like, fine, build it. I was actually very, very skeptical about raindrops. So he's working on it. He's delegating tasks out to his team, but his team doesn't understand the concept the way he does. They don't have the same vision, right? They weren't the person who was standing in the shower when this epiphany happened, right? So he has to break it down into small steps, into tasks. Every feature that's built into any application is usually on the back end 100 little tasks, and those tasks can be delegated out to different people, and some of them can be done simultaneously, and some of them are dependent on others, right? But you have to break it down. First you have to take the data and create, a data feed that you can use. Then you have to figure out the rendering part of it. There's a whole process that you go through when you're building a feature like that. And the people doing each of the little steps don't have to fully understand what they're building as a whole, right? But you need somebody who does grasp it at the top, because that's where the delegation and the vision comes from. That's what pulls it all together. Does that answer the question?
Sorry, yeah, no, I think that's good. I think also what's part of that is there's probably an underappreciation by users as far as how much goes into bringing on even what seems to be a fairly small feature to market, right? It's
Yes.
I've always found it amazing how hard coding is, not from the standpoint of how long it takes to actually build out whatever you're coding, but rather the QA side, right? There's always these little, talk about butterfly effects, there's these bugs that seemingly come out of nowhere, and you have no idea why until it's just tested to the ground.
Yeah, we have a ratio internally. For every 4 developers, we have 1 QA. And so that's the ratio. When we hire enough developers, we hire another QA, right? And every feature, every single thing, no matter how small, goes through a QA process. And the QA process is 2-part. There is manual testing, where somebody uses it and tries to break it. And then there's a whole set of automated tests that occur. Automated test attempt, anytime we find something that breaks with one feature, we build an automated test for it so we can use that against other features. It's the only way to kind of maintain scale. But the QA process sometimes takes longer than the dev process, because they'll kick things back to dev all the time. I think like the scanner, the market scanner in Transpire got kicked back to QA to dev more than 100 times. It took like 9 months of QA work before we were able to release that feature. It took 6 months to build, right? And like you add them up, it's like a year and a quarter, right? That's a lot of time for one feature. But the quality part of it is tough. And the way I look at it, right? Like I'm building tools that people make decisions for their money with. Very soon they're going to be actually executing trades and automating execution in Transpire, right? It has to be quality. I don't want somebody to call me and be like, I lost my account because your software had a bug in it, right? That would suck. Like that would be painful. It would be like when Interactive Brokers, blew up a bunch of their customers' accounts because they couldn't handle negative oil prices. Like that's a big screw up on their end. That's a failure on their QA team. I bet you now, IBKR, every single time they release a feature, they have an automated test for what if the price goes negative? How will this work? What will happen? Will the system crash? How will it handle it? How will it show it on a chart? How does the user interact with that? That's a big deal. And nobody really understands that. The amount of work that goes into testing software exceeds the amount of work that goes into building the software very often. Yeah, sure. So the stack is it's a React stack. It's very heavily built in JavaScript. We have Transpire is a cloud-based tool though, so most of the heavy lifting occurs in the cloud in various Amazon data centers around the country and the world. We use relational databases for some things. We use non-relational databases like Mongo for other things. It really depends on the type of data that we're working at. We build something called a data lake, right, internally. So it's like this giant monstrosity that contains like all the data that is used in the system. That contains like cash, candle, and timescale price data. It contains derivative. It contains, positioning data, like visual positioning data, like the coordinates of, how where the lines are, where the indicators are. And then we try to build for scale, right? So things that need to happen quickly are built in C++, right? And they're built server side. They're built on a server that has a direct like NICE data feed going into it, like an actual data center cross connect. Because speed is very paramount, especially for like automation stuff. One feature that we're rolling out very soon, I can't mention the name because it's going to be on a separate brand name, but it's an order execution engine. If you know what like Zapier is, right, or IFTTT, it's like that, but for trades. This is a C application that runs server side, right, on our end, that can take an alert from TrendSpider or TradingView or StockCharts.com or any platform and convert it into a live order at any broker. Right, it's meant to be completely agnostic, so that you can create an alert on your chart and start trading more like an institution. You can visually say, "Hey, when price touches this level, buy 100 shares of Apple in this TD account or this E-Trade account," right, or both, right? Buy 100 in this TD account, buy 100 in this E-Trade account, do it in this order, and then post to Twitter. Right, it's providing this like automation layer, but that has to be really, really fast, right? Because if somebody triggers an order, you don't want to have a whole bunch of network lag and processing lag that will lead to slippage, and ultimately an order not getting filled or getting filled at a worse price. So, like for each aspect of the product, we have to determine the stack that will be used for it. It's not just one stack. The front end is JavaScript. The back end is a bunch of different database platforms and also a whole layer of C applications that, because C executes faster, it's a compiled language, right? Whereas JavaScript is an interpreted language, which means it's slower. To a regular user, you would never be able to tell the difference, right? Because it's slow to a computer, it's not slow to a person, right? It's still very fast to a person. But when you're dealing with it at scale, when you have thousands of people creating alerts, when you're having thousands of people automating orders, you need it to be very quick, because the actions, like if both of us are on a platform, you're doing something very heavy, I'm doing something light. Your heavy load can slow down my experience. So you have to be very cognizant of how to structure that. That also plays into things like redundancy and resilience in your actual infrastructure. Like we have multiple data centers that we use, not one. Right, they mirror each other. They're the exact same deployment in multiple places, even though it's cloud. Right, we use different data centers. We also use different providers. Amazon is our primary host, but we have other hosts that we use. And then not only that, but we also use different data feeds. So for like our NYSE US equities feed, we have two of them that are identical, that come into different data centers, hook into different servers, because just in case one of them goes down, right? Just in case there's a networking issue that causes the route between, Amazon, Ohio and NYSE, New Jersey to fail, right? Just like something like that can really cost somebody money. So we spend so much in that because I just don't want to like I want to build this to help people. I don't want my product to be the reason somebody has a bad day, if that makes sense.
Let's pivot a little bit to what you may be seeing from your own observations on markets and maybe from underlying clients this year, right? Because I'm going to assume that a lot of people might be testing strategies or looking for indicators on when to short. I'm going to assume a lot of people are figuring out how to identify when there's an extreme, when things keep on getting more extreme. Talk about some of the change in behavior you're observing here, given the unusual way markets have been acting here in 2022.
Yeah, so we don't track, we don't like spy on our users. So I couldn't answer like what we see differently from user behavior. We certainly see a large increase in the amount of back testing that occurs. So like most of last year, we averaged about 15 to 20,000 back tests performed per day. This year, it's been 35, 40. I mean, it's been significantly higher. I think
that's actually interesting, and that's not because necessarily of a sudden increase in the number of users. It's the existing users who are just wanting now to say, okay, I got to get more serious about a rules-based approach.
Yes, I think a lot. Like I think that since COVID, right, you could have swung your arm, hit a stock, and made money. You didn't have to be very good at investing or trading to make money in the market, because everything was rocket shipping up and to the right. And if you just waited for a little dip, every dip was buyable, right? It doesn't matter when you bought during the COVID crash. Like I bought a lot of SPY. I opened a large SPY position during the COVID crash. I bought on the way down because I was like, I don't think I can call the bottom here, but there's a bottom somewhere, right? That approach hasn't worked for 4 months now. right? It's basically since the beginning of this year, basically since January 4th, the first trading day of this year, it's been nothing but volatility and pullbacks and consolidations. We're 20% off the highs on SPY. We're a little more off on the NQs. So I think users have started to look for ways to be actually traders, right? Instead of just, you know, being pikers who are getting lucky all the time, they're realizing that it's starting to take a little bit more work, a little bit more skill, a little bit more homework, right? You're going to have to be a little more systemic. You're going to have to take your profits a little bit faster. I remember during the big run, like last fall, people were buying tops all the time. I remember Skills, SKLZ, right, like a year ago. And this company is in my opinion a worthless company, right? It's a terrible business, But I remember it was trading like $40 a share, and people were buying little pullbacks on it, and it blew my mind, right? Like because fundamentally, like I'm an investor at heart, right? I trade, but I like to trade things that are investable, that would be worth holding for a while. So fundamentals are a big screening thing for me, and it was just completely out of the window. Nobody cared about the business. Nobody cared about multiples. It was just straight up and to the right. Now people are having to worry about things like that. They're having to worry about things like inflation, right? And the pressure that it applies to the markets. They're having to worry about the reaction to inflation more than inflation itself. It's not easy anymore. So people are trying to find ways to make money in this market. And to do that, they're testing a lot more strategies. Or testing, you're right, like they're probably testing a lot more short strategies. The issue with that in my mind, though, is how often is the crowd truly right? Like, if you look at markets, how often is Barron's when they're calling, markets in trouble? I just retweeted something I saw this morning about how effective Barron's covers are as a contrarian indicator. How often is like CNBC's like markets in turmoil? Like when retail starts like joke about like retail capitulating, they like to say like they're taking out our stops, or they want to bring it down to take us out of the position. I mean, that's ultimately what kind of happens, although I don't think it's some big conspiracy. It's become tougher. We've definitely seen, more customers like closing their accounts than normal, right? I think a lot of people have gotten hurt in the markets over the last few years because they've been trying to buy growth and buy dips, right? And just getting destroyed when it just dips more. It reminds me of this old meme, which it's the guy, right? The most interesting guy in the world. It's like, I don't always buy a dip, but when I do, it keeps dipping. That's kind of the mentality, the feeling amongst retail nowadays. But it doesn't have to be that way, right? Like you can use automation as a retail trader to take that emotion out of it. I think a lot of retail's pain is self-inflicted because they keep trying to do things that worked a year ago and don't realize that that's not trading, right? That's just gambling. What trading involves analysis and determining levels and managing risk, right? And tools like TrendSpot.
Well, plus they don't realize that what happened the last year was an anomaly, and what's happening also this year, I'd argue, is an anomaly, right? If you're going to be trading from a longer term perspective, you have to go with large data, long amounts of times, not the small sample of the here and now. And that here and now, by the way, can still be a year plus.
Yeah, absolutely. You have to. You can't be gambling on 0 day to expiry calls right now, right? Like that's what a lot of people spent the last 2 years doing. Short options, out of the money, right? Making 1,000% returns on it, and then all of a sudden, they're getting washed up every trade. It's kind of painful to watch. We've noticed some other things that are interesting, like the number of alerts being created has really increased quite a bit. It's almost those are just basic alerts like following indicators. Like these are the dynamic alerts where you're like right clicking on a chart. Those have increased a lot. I suspect a lot of them are being used, for like short things to like trigger a short trade. And I think that's healthy, right? Users using alerts to trigger decisions instead of making them on the fly, I think is always healthy. But what worries me is as you see all these retail traders finally capitulate under longs and finally start to decide that, they should trade the downside, right? I think that's exactly when the market decides to bounce and reverse. And I'll point out one thing, right? Like, and mad props to Brian Shannon from Alpha Trends. If you haven't talked to him, you definitely should. He's brilliant. But Brian evangelized an indicator called Anchored VWAP, which is one of the only trading indicators I use. I don't like indicators much at all. I think too many indicators can create a lot of noise and can cause a lot of paralysis, right? You have mixed signals, mixed information, you're overwhelmed, and it slows you down. But anchored VWAP is a very simple thing. If you anchor a VWAP at the COVID low, at the very bottom, right, March 2020, you will see that it has currently just, like when it bounced a few days ago, it bounced off that level. right? And it continues to close above it. And what anchored VWAP tells you, me as a trader, right, is that on average, on a volume weighted basis, everybody who bought since the COVID low is mostly in the green right now, right? They're very likely to add to their positions as you approach their kind of break even point. The opposite happens if we fail and break below it, right? You're going to have a lot of people looking to sell as close to that line as possible. It will become very strong resistance if that happens. So I really hope it doesn't. But currently, it's providing some really meaningful support. And I think it's kind of just funny and silly how something as simple as an volume weighted average price measured from a particular point, like a major inflection point, the COVID low, can provide such an accurate level. But that has become one of the most popular indicators in TrendSpider lately, because you see that kind of stuff on everything right now. If you anchor VWAPs at the COVID lows, price has basically been drawn to that level. It's and the joke among retail traders, it's like a magnet for price. I don't know if it's a magnet for price so much as just, mathematically, it's the level that a lot of people are still in the green with, right? A lot of big investors. It's also a common component in algorithms, right? So algorithmic trading at a lot of firms that do that kind of stuff use to make sure that they're not paying too much of a price or they're not selling at too low of a price, right? Like this is how an institutional or a money manager will like claim a trade was good for a client. They'll say like we bought us really close to the VWAP. Right. They sometimes use TWAP as well, which we recently added as well. But the COVID low AVWAPs, I certainly encourage anyone who trades to look at those. TrendSpider has them. A few other platforms have them. It's not unique to TrendSpider. Brian Shannon from Alpha Trends has made them popular, and I'm really grateful for him for doing that. But look at that; it's mind blowing.
All right, so for the last few minutes here, and again, everybody that's here, make sure you follow Dan. Just give him some support also, and check out TrendSpider, obviously. But you alluded to the idea of you find having too many indicators noisy and becomes problematic. I had somebody tweet at me kind of noting that my lumber to gold indicator, quote unquote, is not working, which is a little bit of an odd thing to say because it's not necessarily a function of the signal and indicator not working. It's a function of the opportunity set not working because equities and treasuries up until last week or so kind of acted the same, which is counter to all history, right? Which kind of goes back to the anomaly point. But it is interesting to me that people think that you have to have so many different overlays to try to find an ideal trade setup. The reality is we've seen from history that the more complicated any strategy is, the more it has those butterfly effects as well, where it blows up. I mean, this is where I think a lot of hedge funds ultimately go wrong.
Yes.
How do you encourage people to try to focus on just one or two things and stay consistent to those one or two things? Because some people will follow an indicator and then they say it's not working, then they go to another indicator, then that's not working, right? And you're never going to have an indicator that always works.
No, you won't. I think it's a natural progression that people go through. When I first got into trading, I used to have those charts with 10 different indicators on them too. And then some of the best traders, like if you know some people who are very good at trading, look at their like very early posts when they first started posting, right? You'll see the same thing. As people cut their teeth, as they get a little bit more sophisticated, they usually start stripping their charts down. Some of the best traders I know have nothing on their charts. They don't use indicators at all. They use price action only. Others have built systems where they don't even look at charts, right? And they use fundamentals. It's like finding yourself. It's like being a teenager and like growing up and discovering who you are and what you're about, right? Like nobody when they're like 15 knows what they're really going to be like when they're, fully matured in their 30s. You grow up, right? And you end up stripping your charts down. The other thing that I do to encourage people is I try to bring in ways to make it simple for them. One way, we brought an indicator in called Go No Go. Go No Go Trend is developed by my good friends at Go No Go Charts, and they were very, very gracious to let us put it in TrendSpider and give it to everybody for free. But Go No Go takes like 7 or 8 of the most common indicators that users use and combines them into one, right? And it does it in a way that doesn't put any specific amount of weight on any of them. I'm trying to describe it without giving away their secret sauce. It doesn't put a specific more weight on one or the other. It just uses a scoring system and it just colors your candles, right? So then as a trader, all you need to do is remember 5 colors, right? Blue means go, red means no go, right? And there's shades in between. And it makes it easy for somebody to just look at it and get a sense, like if I had 10 indicators on my chart, ignoring which one pointed which way, right? Most of them are pointing to the up, or most of them are pointing to the downside, or most of them are kind of confused, right? So giving people ways to distill it down so it's simpler for them. I don't think it actually matters what indicators traders use. Like if you're a technical trader and you want to use MACD, that's fine. use RSI, that's cool. You want to use ADX or anything, go, no go, anything, that's fine. It doesn't actually matter. What matters more is sticking to it and being consistent with how you use them, right? If you're using MACD, use it exactly the same every time. And then you'll know if MACD is useful for you. Problem with them is when you have too many indicators, you're not consistently looking at any one of them. You're not applying a system to any of them. I think systems.
Well, you're chasing it, right? Because you're saying, okay, well now this indicator is working in the here and now, whereas the one you weren't before. So there's almost like trying to chase momentum in what's working in the very recent past.
Yeah, and the other thing that a lot of people don't know is how are their indicators calculated? What exactly goes into an RSI? Like, I bet you 9 out of 10 people who use it can't answer that question. What exactly does the letters MACD stand for? I bet you most people who use MACD don't know, right? They have no clue. They just used it and visually eyeballed it and said, this is my indicator, right? And then something goes wrong and they flip to something else. And then they're like, this is my new indicator. They don't know what they're doing. They don't know what they're looking at. They're looking for visual cues they can use to predict the future. And that doesn't exactly, mesh with what these things actually measure and what they do. If MACD is a moving average based indicator, right, then you know something about how it works. You can your brain can adapt to that. But you don't even know what it is most of the time.
Yeah, that's the challenge. Just how do you get people to try to self-educate and spend the time as opposed to just look at a chart and not really understand. I always make this point, right? It's like too many people look at the right side of after the equal sign, right? They don't look at what happens before the equal sign. And real knowledge comes from understanding what goes before the equal sign, not necessarily the conclusion.
So early in TrendSpotter's development, when we were building automated trend line detection, we did an experiment. Right. I went on Twitter and I got 10 people and I showed them a chart and I'm like, hey, draw trend lines on this chart. Just tell me what you would see. Show the same chart to 10 different traders. You ended up getting like 9.5 different views on it. Everybody saw something different. Only 2 people were really close to each other. That's why I say a half, because they weren't even identical. But you show the same chart to 100 people, probably get 100 different viewpoints on it. Everybody sees something different. That's what makes the market so beautiful. But that's also what makes it so difficult to make sense out of.
Yeah, no, absolutely. So again, Dan, I appreciate you spending the hour here. Everybody make sure you follow Dan. Check TrendSpotter. Thank you, Dan. I appreciate it.